My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. My friends, I'm just trying to save you a little money. My job is not just entertain, but to explain. So call me at 1-800-743-CNBC. Tweet me, Jim Cramer. When the S&P 500 goes up for 6 straight weeks, something incredible can happen. The market can actually go back down a bit. Sell. That's right. It can sell off. Pretty shocking, I know. Now, today I heard endless chatter about the death of the bull market because of the overwhelming selling from the get-go. Hey, after all, the yield on the 10-year Treasury has soared over the past month, shooting up to 4.24%, including a big move today. No wonder the averages got hammered. Dow shedding 410 points. Oh, no. S&P plunging 0.92%. NASDAQ plummeting 1.60. Believe it or not, that's much better than where the market was at the lows of the day. Even worse, the stocks that led the decline of the market's old leaders, Apple, Nvidia, McDonald's, Meta, ARM Holdings. So many names with big gains. I don't know what to say. I have to default to that stock-seer Jim Morrison the Doors. This is the end. My only friend, the end. The end of our elaborate plans. The end of everything that stands. The end. All right, look, I used to write obituaries for a living. I know what the end actually looks like. Oops, cart before the horse. I forgot to say, markets in turmoil. Can't have an end before a Titanic sell-off, right? Titanic being the operative term. All right, enough of the bogus exaggeration, needless hyperbole. I want to put the sell-off in a little perspective. First, when you get many up days, to say nothing many up weeks, the market's prone to pullbacks, often indiscriminate pullbacks, like some that we saw today. Now, you know I'm an inveterate gardener. I know that we need sun, lots of sun for the tomatoes to come up. Cherries, plums, beefsteaks, you name it. I like the sauce with the plums. But you know what's really a killer? No rain. If we don't get rain, we might as well be trying to grow tomatoes in the Sahara or even Death Valley. A sell-off is like rain. It's both a necessity and an inevitability. Yet what happens when it rains? We all just act like cats. We get scared. We're afraid to go outside. Scaredy cats. Well, newsflash, you and I are not cats. I know exactly what the rain does to cats that make them so skittish, and I used to have 6 of them. However, this kind of rain like pullback, it gives the bears all the ammunition they need to scare you out of the market with horror stories of October's past. The Great Crash of '29, Black Money in '87, the nightmare of the financial crisis in 2008. The only thing that surprised me today is that no commentator invoked any of these dates when they were trying to scare the heck out of us. Hey, there's always tomorrow. And why not? I mean, isn't the bond market terrifying? I mean, 4.2% on the 10-year? That has to be a bolt gun to the head of the bull, right? And when you remember that October tends to be a terrible month for the market, maybe October 24th or 25th will be more horror stories as befitting the newfound turmoil. On the eve of Halloween, though, let me give you a little Casper the Friendly Ghost narrative that will set things right, outline the opportunities, take us out of the twilight zone. First of all, the stuff about the 10-year going to 4.2% that many of the young people talk about every minute, that's really scary stuff, right? This time, like Scooby-Doo and Zombie Island, this time the monsters are for real. Look, I started this business more than 40 years ago, right down the block from here at Goldman Sachs, in a building that's now turned into 3-bedroom condos with a rooftop pool. I might have to buy a couple units. Not long before I got to Goldman, the 10-year Treasury rate shot up to 15%, December of '81. Dow Jones average stood at 1,072. The yield on the 10-year stayed above this current dreaded frightening rate of 4.2% until July of 2002, for heaven's sake. In the interim, what happened? The Dow Jones Industrial Average went to 9,000. That's right, Dow 1,000 to Dow 9,000 during a period where the 10-year Treasury rates never fell to 4.2%. It was always above that, mostly well above that. And we were in an incredible bull market almost the entire time, save for October of '87. Now, I hope that gives you some perspective of the bond market versus the bull market. The great bull market of the 90s happened with substantially higher rates than we have right now. In absolute terms, 4.2%, geez, that's low rates. Nothing. Second, stocks have made so many parabolic moves of late that I'm actually glad they're coming down. I was actually getting tired of saying you need to wait for a pullback every time someone called in about something good during the lightning round. Now that we're getting the pullback, should I tell you to stay indoors? And I wonder, who can stop the rain? For heaven's sake, can we just admit that it's about time we had a reprieve from all this buying? I mean, we had a reprieve, by the way, in Tesla, and then they reported a good quarter, it goes up. See, stocks can't forever go up in a straight line. Apple was at 165 in April, ran to 236, 165 to 236 on Monday. It was due for a pullback, especially since we heard about tepid numbers for the iPhone 16, which launched a month ago. Are the slow iPhone 16 at this point still revelatory? NVIDIA stood at $43 a year ago. Yesterday it was at $143. Doesn't even NVIDIA deserve a rest? Wasn't it due for a pullback? Remember, from mid-July through early August, NVIDIA fell from 134 to 98. Then it shot back up to 130 before plunging to 102 by early September. Remember, that was the fabled double top. That didn't work. Both times I read the obituaries on NVIDIA with viewings and wakes galore. They read certifiably deadly. Must have been prepared before, like those tremendous New York Times obits. Everything but the funeral parlor was listed. Oh, yes, and the time and date. Yet even after today's $4 beatdown, NVIDIA is still at 139 change, higher than its July peak. Has something gone wrong here? Of course not. Do you know something? The greatest stock of this generation is simply taking a periodic break, like we've seen many times before. Do you know that even the greatest horse of all time, Secretariat, lost to Onion in the Whitney and Prove Out in the Woodward? I don't even know where those horses, I don't know any of those losers. Who were those horses? Some stocks have been so strong that it takes a true horror like an E. coli outbreak to stop the run. And that's what happened to McDonald's, which has been straight up since it unveiled the $5 burger, running from $2.45 this summer to $3.17 2 days ago. Today, the Golden Arches got crushed, down almost $25 at one point, and on an E. coli outbreak center on the quarter pounder. 49 people sick, 1 fatality, 10 states. Might have been the onions. Yet even then, McDonald's managed to rebound off its low, finishing down just $16 or 5%. Or how about Starbucks? The horror, which announced an even worse loss than we expected. Something that may be the benchmark of bad news from this 6-week stampede. Oh, yeah, the stock got crushed last night, initially this morning, falling all the way from 96 to 93. Yet even then, the stock bounced back and finished the day in the black. That's right, it finished up. Look, you get what I'm trying to say, don't you? When I was a cub reporter at the now deceased LA Herald Examiner, it was my job to scare you, to scare people, to scare readers. We had real bad circulation numbers at the Her-X afternoon paper, not a lot of those still around, competing with the all-powerful Los Angeles Times. My marching orders frighten people out of their wits. So panic, become indispensably scary. That's what I was told to do. Make sure the readers know how dangerous the world really was and sell subscriptions. Always being mindful that people don't buy subscriptions if the news is constructive. Back then I played for dinner. So I couldn't stem the tide of destruction and death that appeared under my byline 2 and even 3 times a day. Now, though, I have a different agenda. My agenda is nothing other than to try to help you make money. Being constructive. Being opportunistic. That's my MO, because the market's been pretty darn fabulous since I got in. Nothing really has changed. So let me give you the honest to goodness bottom line here. It's going to rain a bit. All those stocks where I told you to wait for the sell-off, well, here it is. Nobody knows how long the sale will last, so don't miss it. Things might be back to full price in a few days, maybe a week or even 2. Oh, unless you're a cat. Then I would advise you, stay indoors. Let's go to Joel in Florida. Joel.
Hey, how's it going?
Not bad, Joel. How about you?
Good. I just want to introduce myself before I ask a question. My name is Joel Leon. I work as an IT technician. I'm always looking at stocks and kind of learning how it works and everything. I figured I'd talk to a pro. My business is Revelation Technologies, RevTech, and I've been looking into Intel. What do you make of that?
Okay, I actually, for the longest time, would have told you to please don't look. But the stock has come down enough that I have to tell you, Joel, I am not going to fight the tide anymore. I got people out about 40 points ago, 30 points ago. I'm done. I think it's not a great stock. There are better, but I'm not going to tell you to sell it. All right, listen to me, everybody. Don't get scared out of buying stocks at lower prices. We've been waiting for the sell-off. Maybe you should even take advantage of it. Maybe time. It's been a tough year for Etsy stock, and I'm seeing if investors might be getting a better opportunity for the next quarter. When I sit down with the CEO from the company's very cool holiday pop-up store in New York City. That Mattel reported after the bell, and I'm seeing how the toy company is positioning itself for the end of the year in my post-earnings exclusive with the company's top brass. And in the face of a sell-off, it's a good reminder to make sure you have a diversified portfolio that can handle whatever this market throws at it. And that's why we're playing I Diversified to see if the portfolios of Cramerica pass the test. So stay with Cramer.
Don't miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. Hashtag Mad Mentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Oh my, it's been a tough year for Etsy, the online marketplace for all sorts of unique, handcrafted offerings from smaller businesses. The stock is down nearly 40% for 2024. The last quarter was poorly received. Specifically, management's gross merchandise sales outlook for the third quarter, which came in weaker than expected and sent the stock down hard. You know, it's stayed down ever since. So we have to ask ourselves, could this be a buying opportunity going into the next quarter, a week from now? Maybe it's too soon to bet on a turn. Earlier today, we checked in with Josh Silverman. He's the CEO of Etsy at the company's limited-time holiday pop-up event in New York City to learn more about how they're trying to reinvigorate the platform. Take a look. Josh, you know I've been a close follower of Etsy, but I'm kind of blown away by where we are. Please tell us what this is.
This is an Etsy pop-up where we're bringing to life Etsy so people can really walk in the space and experience it, and the press and just people from around New York can get a chance to see the gorgeous and artisanal products that are available.
Well, when I see this, I think I want to get into the gifting mode, and yet we do have some hesitance by males to gift.
Yeah, you know, a lot of men feel not confident to give gifts. And actually, the funny thing is, we did a survey. 75% of men said they don't feel confident gifting, but 90% of their female partners said they don't feel confident in the male partner. So not only don't we feel confident, but we shouldn't feel confident in our ability to give the perfect gift. And that's where we think Etsy can really step in. We've used the power of Gen AI to come up with the perfect gift for you to give to someone else. We think it's a great way to take stress out. And there's no place like Etsy to find the perfect thing that expresses your sense of identity and your care for someone else.
Well, given the fact that you call it the snowflake effect, there should be something for everybody.
Yeah, something really unique that says that I get you and I understand. And that's the fun thing with Etsy is just tell us one thing about someone, like maybe their partner loves mezcal, and we can find the perfect gift for someone who's a mezcal lover.
There have been so many changes to the site, particularly the mobile, that I am mystified why people don't realize, for instance, the Q score, which to me is very helpful for gifting.
Yeah, it's a big thing. So really, while the whole world is going to how do I just put things more on sale and discount things, we're really leaning into what makes Etsy Etsy. How do we help you find the very best of Etsy? And so we've revamped the way our search engine works so that we really not only consider what product is someone most likely to buy in the search engine, but what's most likely to result in an amazing purchase experience. So the way that sellers can earn more prominence in search is by making sure they always ship on time, making sure they always get 5-star reviews. And so it's giving sellers more agency, and it's making sure that we always match buyers with the perfect thing.
All right, so Josh, how did you select what's here? Because just going around the pop-up store, I'm amazed to see what I can give versus what I thought.
There's such diversity on Etsy across every category, home furnishings, clothing, and jewelry. And so we used a combination of external experts, so like Naomi Osaka, and Drew Barrymore helped select their own personal collections. And then we had some of our own internal experts pick some collections. And then we actually used the community. So we had the whole Etsy buyer community vote on some of their favorite products.
All right, so let's talk about the stock for a moment. I mean, there's been an incredible surge in the people who use Etsy from COVID. I think it's quite extraordinary that you basically kept all those people. Yeah. It's not been enough for Wall Street. They obviously want to see the gross merchandise go up. But they don't seem to realize that you too are addressing this issue.
Yeah. So first, we have 91 million active buyers around the world, in addition to our 7 million active sellers. We're about where we were at the very peak of COVID. So tens of millions of people came to Etsy for the very first time because of COVID, and we've held virtually all of them. That's meant replacing billions of dollars of sales of things like masks with other things in order to stay roughly flat. We think we can grow and be much bigger than we are today by not only being a great place to find the thing you want and can't find anywhere else, but also to be a source of inspiration and a source of discovery. And so we're really leaning now with Etsy into making more screen real estate available to surprise and delight you with ideas for things you didn't even know you wanted.
Are you surprised about the adoption of what I regard to be a crackerjack mobile experience? It's not really necessarily what people even seem to know about.
Yeah, so our Etsy app only accounts for about 45% of sales on Etsy, and yet the app is the best place to experience Etsy. So one of the things we're really leaning into is driving a lot more people to use the app. We know when a buyer starts using the Etsy app, their lifetime value goes up by about 75%. So we're investing a lot more right now in driving people and helping them to understand that they should be adopting the app.
All right, so we have one store here. It is beautiful. It's in a terrific neighborhood. It will open and I think dazzle people. But do you need to replicate this in other cities? Because it's really a showplace.
It's really cool to be able to walk in and experience the Etsy brand in person, but it's not our expectation to go into retail. We think our online model is amazing, and the fact that everyone around the world can access Etsy, they can do it for free from their mobile phone, and it means we have a very capital light model, which we love.
Do you think people realize that you are the second most popular pure play e-commerce site after Amazon?
I really don't know that they do. Only Amazon has more active buyers. For pure play e-commerce companies, only Amazon has more active buyers than Etsy. And we think the more the world consolidates around commoditized commerce, just the cheapest version of something, which is what's in right now, the more they will crave an alternative. And we think Etsy is best positioned to be that alternative to commoditized commerce.
Well, we're in a time psychologically where people seem to be inclined to buy something from a Temu or a Shein, which I can tell you I made the mistake of buying that for my wife, and unfortunately Waste Management was the biggest beneficiary. What I'm trying to figure out is how important is price right now given the psyche? The $5 McDonald's burger.
Value is a combination of two things. It's about price, but it's also about what am I getting for it. So last year we built a lot of tools so our sellers can put things on sale and offer coupons, and I think that's table stakes, and our sellers are doing that. And you can find great value on Etsy, but we're also leaning into the other side of value, which is the fact that this is made just for you, that it's artisanal, that it's handcrafted, that it comes with a story, and we're making sure we're leaning on both sides of value to tell you why Etsy is different and better.
Well, my wife's birthday next week. The fact that I remember that is extraordinary. But one of the things that's incredible is I was so concerned, well, what happens if I buy something today and miss her birthday because it comes late? You offer both an alternative of a couple days, and there's also this kind of novel, it's not ready yet, but you can bank on it.
Yes, so we've launched two features this year. In addition to helping you find the perfect gift, we've launched gift lists, which will remind you that your wife's birthday is coming up next week, and things that you've been thinking about for her all year. But we've also launched the gift teaser, which means that let's say your wife's birthday is tomorrow. You can buy her a gift on Etsy today, and she will get a gift teaser tomorrow on her birthday. You can even record your own voice or your own video giving her a message saying, I love you, and here's this gift for your birthday. And it's going to arrive in a few days, but she knows she got the message from you on the day, and then the gift arrives a few days later.
Now, we have people who are resident trend experts. Again, I get lost because there's 120 million things, but if I find people that I like and follow, that could be a way to be able to access things for people who don't know necessarily or have no confidence about gifting.
That's right. And so leveraging the power of the community, thousands of influencers out there that are amazing curators, that have their own sense of style and curate their own collections. And then you can follow their collections, and that can be a way to navigate Etsy.
All right. Now, I think a lot of people feel that AI is overused, but you probably are the site that we most need it for. Where are you in terms of adoption of AI?
We're leveraging AI in many parts of our site, and I think Etsy has more to gain than maybe almost anyone, because Sorting through 120 million items to find exactly the right thing is hard. And so we're leveraging the power of AI to become superhuman, to combine humans with machines to get you to the perfect item, and also to make sure that customer support goes quickly and that you get, a really seamless shopping experience.
All right, one last thing that does trouble me about Etsy is something that I've discussed with both my wife and my kids, which is they say, well, who cares about the stock? It's a great site. And I come back and say, unfortunately, my job is also to care about the stock. How do you reconcile? Because you know that the stock got taken out of the S&P, booted, so to speak, and yet the company just keeps getting better and better. It is hard to reconcile.
It's our job to make an amazing customer experience that delights buyers and sellers, grows the business, and results in more revenue, more sales for our sellers, more profit for our shareholders, and makes the business bigger and better. I think we've done more to make the customer experience better this year than in any of my 8 years in the tenure. I'm incredibly proud of the work that the team has done, and customer perception is going to catch up and the market will catch up.
Now, if that's the case, then the gross merchandise numbers will go up. I mean, it's hard for them not to. But the word has to get out. Pop up really more about the word getting out, because it's pretty amazing to think that all this could be available to me.
The shopping experience on Etsy is markedly better than it was even 6 months ago. We now just need customer perception to catch up.
I couldn't agree more. That's Josh Silverman. He's Etsy CEO. Come on down to Hudson Street. It is really pretty amazing. Thank you, Josh.
Thank you, Jim.
Coming up, this market isn't always fun and games. Cramer is finding out if this toy giant can bring the profits to playtime. Cramer's got an after-earnings exclusive with the CEO of Mattel. Next.
All right, what do we make of these results from Mattel, which reported after the close? This iconic toy maker had struggled in recent years despite getting a bit of a lift from the Barbie movie in 2023. Unfortunately, the whole toy category has been in a bit of a rut, which is why the stock was down almost 6% for the year as of today's close. Now, tonight, Mattel reported what some would say is a mixed quarter, a slight revenue miss, but paired with what I think is more important, great gross margins, which translated into a 19-cent earnings beat off a 95-cent basis. That's what I've been waiting for. Unfortunately, I'm not sure how much credit they'll get for it because management only tweaked their full-year forecast around the edges, lowering the revenue outlook while raising the gross margin outlook, leaving the earnings guidance unchanged. We've got to ask more about that. With a complicated quarter like this one, we need to make sure we're getting the whole picture. So let's take a closer look with Ynon Kreiz. He's the chairman and CEO of Mattel to learn more. Mr. Kreiz, welcome back to Mad Money.
Hi, Jim. It's great to be here with you again.
All right. Well, it's great when someone comes on, tells me that they're going to get better, more profitable with great free cash flow and good gross margins. And that's exactly what you did. Please explain to people why profitability and free cash flow are so important to you. Emphasize perhaps a little bit more than the revenue numbers that someone on Wall Street wanted.
Well, the priorities for the quarter was to grow our profitability, expand gross margin, and generate significant cash flow. And the highlight of the quarter was very strong gross margin expansion, fully offsetting the Barbie movie comparison in our bottom line relative to the prior year. Also very important to note is that free cash flow was up nearly 50% in the trailing 12 months as we continue to strengthen our balance sheet. We look forward to a good holiday season and expect to grow top line in the fourth quarter and gain share.
Well, if that's the case, you were a little conservative in your outlook because you had a terrific earnings per share number. I know you could have raised your earnings per share more, but it's not something I know I would do into a holiday season. You never know. But you're obviously optimistic. Why not take up the guidance a little bit further?
Well, we still expect growth in adjusted EBITDA, double-digit growth in adjusted EPS, and $500 million in free cash flow for the year. We now expect our gross margin to be higher by 200 basis points above last year and reach 50%, slightly offset by potential decline in our top line. So this is the guidance for the year. Strong performance. We're in a great place for the company to continue to position Mattel for long-term growth.
Okay, so you did repurchase $68 million worth of shares. That's bringing 9-month total of $268 million. What are you going to do with all this free cash flow? Because some people would say, listen, why don't they just blow out the revenues? I agree with you because the old Mattel used to try to do that. Didn't work. The new Mattel is going for profitability. What is the plan for capital allocation?
Yes, we've done a very good job over the last few years and continue to strengthen our position, our balance sheet, generate more cash. And yes, we did purchase $268 million of share in the last 9 months. We have still over $730 million of remaining allocation under the current authority, and we expect to continue share repurchases over the coming period in line with our capital allocation priorities.
Now, one of the things that I'm very excited about, it is still the hottest thing in the world, I got to tell you, is F1. You've got a partnership. Now, you already have unbelievable IP in that particular segment. Do you think that Formula One is going to make it so that this is by far, I mean, can it rival Barbie? Yeah, it can obviously top Barbie if it's really done right, correctly?
Well, Hot Wheels has been on an incredible run. It's up double-digit in the quarter. It's on track to achieve its 7th consecutive record year. And of course, it's the number one brand in the category. The Formula One partnership is another example how we continue to broaden the brand, reach more fans, and continue to excite and delight fans everywhere. We're also growing the adult collector segment, broadening distribution globally, have more content, and of course, don't forget the Hot Wheels movie that we're currently developing with J.J. Abrams at Warner Brothers. So many exciting opportunities for Hot Wheels and the vehicles category as a whole.
Okay, so let's talk about the recovery in the toy industry. You know, you've been very, let's say you've been very clear that the toy industry was in a bit of a rut. What would make it really kind of so that you have sustainable, not this quarter-to-quarter stuff, but just a sustainable glide path where we really could see both higher revenues and better earnings?
Well, the toy industry as a whole is a growth industry. The toy industry has grown in 23 of the past 25 years. The toy industry continued to perform better than initially expected at the start of the year, even though we still expect a slight decline, a modest decline in 2024. Beyond 2024, we believe trends will further improve and that the industry will return to growth and continue to grow over the long term. Mattel is very well positioned in the industry. We expect to gain market share. We expect to continue to grow our toy business and expand our entertainment offering outside of the toy aisle. And this is exactly what we're doing. We are progressing our strategy. You're seeing it in the numbers, and you've been tracking the company's journey over a number of years now. You see how we consistently continue to improve and strengthen our business and are excited by the long-term growth prospects of the company. I
want people to know that Ynon, I met him when the stock was very low and told me, listen, not until we fix this balance sheet will I be able to pound the table, and that is what he's done. Now, the last question I've got to ask, I need to know, what makes you optimistic for the holiday season? There's so many people who are down. I get this kind of negative feeling from people about the economy, pessimism, yet you're presenting a positive story.
Well, we are very well positioned as a company competitively in the fourth quarter. We have a broad-based lineup of innovative products, new segments, new launches, a range of play patterns and price points. We expect a good holiday season with more retail support, additional shelf space, greater representation across major holiday catalogs, and increased marketing and promotion for the fourth quarter. So as a whole, we do expect our fourth quarter to grow and continue to gain share both in the quarter and the full year.
And are you happy with the denouement, so to speak, of the Barbie movie? I mean, I felt like that's all we talked about for a while, and you never said it was going to be the blowout earning. You said it would just be terrific long term. Is it good to be past that and not be asked, well, hold it, what's the next movie? Is it next quarter? Or how about the drop off, that kind of thing?
Well, we continue to build the company across multiple verticals. We're seeing exciting opportunities. We just recently announced that Masters of the Universe, which we're releasing in 26, is in pre-production. We just greenlit Matchbox in partnership with Skydance for Apple. We announced recently another partnership for Viewmaster with Sony Picture Entertainment. So we continue to grow our film slate. We have 17 pictures in development that we've announced and more that are still in the making. And of course, we continue to grow our business outside of the toy aisle in television, location-based entertainment, digital, and other verticals that are driven by big brands, big franchises. And this is exactly where the strength of our portfolio will come into play.
Well, and I want to thank you for being a man of your word. You said you were going to do what you did, and you beat that. I want to thank you, Ynon Kreiz, who is the chairman and CEO of Mattel. Great to have you on the show.
Thank you, Jim. Great to be here.
Mad Money's back after the break.
Coming up, Cramer's always on the lookout for a bull market somewhere. But on days like today, is your portfolio prepared for when the bears lead the charge? Cramer plays a game of Am I Diversified? To make sure you're ready. Next.
Stocks got hit pretty much across the board today. And you need to be prepared for whatever might come next for this market. So that's why tonight we're playing I Diversified. It's where you call me. You tell me your top 5 holdings. I tell you if your portfolio is diversified now. Maybe you need to mix it up a little. You know, it's going to start. It's Gian in Florida. Gian, you're our first caller. What do you got for me?
Hey, Jim. Booyah. This
Booyah.
is Bharti Patel from Homestead, Florida. Here I have my grandson, Gian, whose birthday is today. And he has a question for you.
Okay.
Hey, Jim, booyah.
Booyah, Gian. How you been, partner?
Good, good. My 5 stocks are Eaton, Costco, DuPont, Eli Lilly, and Apple. Am I diversified?
Well, you stay in the picture. You know the rules, and you got the right stocks. Okay, Lilly, one of the premier drug stocks of our era. Eaton, that is both a data center and a machine play. Don't forget, these guys, we like them because they have been at the forefront of how to build out the new electric grid. DuPont splitting into 3 companies. That's run by a terrific group of people whom I think are going to bring out a lot more value than the $35-6 billion that they currently have right now. Costco, we're learning that they may be having a Netflix moment. I really like that. They're going to really start checking cards, cracking down on passwords, so to speak. And then Apple, own it, don't trade it. We have a tech company. We have a retailer. We have a diversified manufacturer. We have a company splitting into 3 that has a chemical aspect, and we have a drug company. Gian is perfectly diversified. Listen to Gian. He knows more than all of us. Thank you, Gian. You rock. And you know, what can I say? You got horse sense. Let's go up with Tony, also from Florida. Tony.
Hey, Jim, I want to thank you for doing this type of thing, diversified, because, you know, a lot of us don't have stocks that's always in the club, but it really helps us out. I appreciate it.
And I think this is so glad you mentioned that, Tony. I want the club specifically to show people teaching so they pick their own stocks, because there's tons of stocks out there that are great. I can't keep track of all of them. Let's go to work.
Okay, my first one is with an AI, probably Dell, DELL. The next one is Pfizer, PFE. And then we got AMD, then Home Depot, and then STZ Constellation Brands. Am I diversified, Jim?
All right, Tony, let me look at this one, because I think we do have a bit of an overlap problem we're going to have to deal with, and deal with it pronto, forthwith. So we got Home Depot, which is one of my favorite retailers. We own it for the trust. AMD, a diversified semiconductor company. Pfizer, a drug company that yields more than 5%. I like that. This is the problem. Dell and AMD do trade together. We're going to have to address that in a second. Constellation Brands, these are trust companies, meaning my trust owns them. Constellation Brands, terrific beer company trying to get out of the wine and spirit. So what do we do about this overlap? I suggest when I look at this, what we have, let's go back to what we just mentioned. We said that Eaton is a good company. We can get a diversified manufacturer, Eaton, right here, where you're going to take out Dell. I know that's not a club name, and I like Michael Dell very much, but we need to get diversified because we cannot have 2 stocks that trade together. Because we do have a consumer packaged good company, a retailer, a drug company, and this is going to be addressed, and then the portfolio is going to be excellent. Let's go to David in Alabama. David.
Yes, greetings from sunny southern Alabama.
Fantastic.
Okay. Since I retired recently, I have been rebalancing my portfolio for dividend stocks. My top choices are CAT, Raytheon, Kinder Morgan, Ford, and Pepsi.
Wow. Really interesting portfolio. Caterpillar, which we sold way too soon for the Charitable Trust, doing incredibly well. Down very little on a day like today. You'd think it'd be down more. PepsiCo, good quarter. I do prefer Coca-Cola's quarter over PepsiCo, but I like the diversification because Pepsi, of course, has both soft drinks and snacks. Ford, not as good as doing as GM, unfortunately, but it's diversified auto company. RTX with a monster quarter yesterday. I can't tell you how great that quarter really was. And Kinder Morgan with an amazing comeback. It's a pipeline company, does have some oil exposure, but we got a pipeline, we got a defense and aerospace, we got auto, we have machinery, and we have soft drink and snack, consumer packaged goods. Perfect. There's absolutely nothing that needs to be done to David's portfolio. It is the essence of diversification. And by the way, just going to tell you, I missed this one, RTX. I should have had that one for the trust. It is really doing incredibly well. Mad Money's back after the break.
Coming up, lightning doesn't just strike twice in Cramerica.
Booyah, Jimmy Chill. Booyah, booyah, booyah.
Thanks for taking my call.
It strikes every day. Cramer is back in a flash with your questions. Next. Jim Cramer's commitment to telling the story behind America's energy revolution knows no bounds. From the depths of the Gulf to the Badlands of North Dakota and the shales of the Heartland, Mad Money's heading back to the Bayou, diving into the heart of America's energy innovation from Chevron's Anchor platform 140 miles off the coast of Louisiana. Mad Money, Invest in America, 6 p.m. tomorrow.
It's time for the Lightning Round Quiz. Remember, that's part of Rob Colson. It's already said in the name of the stock. Said it buy. Chelsea said just good. No, the course stock said not much different. The way you plan to sell. And then the lightning round is over. Are you ready, Ski Daddy? Cover the lightning round quiz. Let's start with Mike in Illinois. Mike.
Hi, Jim. I bought this U.S. oil producer 5 weeks ago. It's up 22%. Got a 4.5% dividend. I sold the 7.5% of it yesterday per your sell rules. Buy, sell, or hold VNOM, Viper Energy.
Well, I got to tell you, that one is one of the best yielding companies in the entire panoply. So I think you can own it. It's a 5% yielder, and it does have the money to carry to pay for that. So I say you're okay with that. Let's go to Dennis in North Carolina. Dennis.
Booyah from Wilmington, Jimmy.
Excellent. Thank you.
The other morning on Squawk, you had suggested looking at good companies that are beat down. With that being said, is it time to back the truck up and load up on Nextracker?
No. Nextracker is a mistake that I made. I had the guest on. I believed it was not the time for that. Plus, it's also a stock that won't do well if Vice President Harris doesn't win. I made a mistake. I'm going to emphasize that. I do make mistakes. Nextracker was one of them. I've told people not to buy it. It continues to go down and track with Enphase Energy. I wish I had never had the story I did. I made that mistake, and let's move on myself. I'm holding it for maybe a bounce on something in the election, and then it's just goodbye. Let's go to Denise in New York. Denise.
Yeah, hey, Jim. My name is Denise, and this is my first time ever thinking about calling you. And I was watching you for a year, so I said, I'm going to try and see. So I got a question. So you said about President Trump's stock at DJT. How do you think that's going?
You know, gee, I want so much to be better at that one. That is what I call an opaque company. I said that this morning on Squawk on the Street. There's just not enough information. No analysts, no coverage. I can't get a bead on DJT. Let's go to Rich in Virginia. Rich.
Booyah, Jim. Thanks for all you do for us club members and for all investors for that matter.
Thank you, Rich. How can I help you right now?
Hey, I'm late to the party on this one. It's up about 50% year-to-date, but it's off its year-to-date high by about 7%. Is it a good time to jump into LLY Eli Lilly?
Okay, I think Eli Lilly is going higher. Will it go much higher? I will say this. I would not buy the stock at this level. I would wait for a pullback. We do get pullbacks. We get pullbacks in the best of all stocks, and NVIDIA and Apple. We might get one in Lilly, and then I will tell you to pull the trigger. Rodney in Texas. Rodney.
Booyah, Jim.
Booyah, Rodney.
Hey, I've got about 100 shares in Dutch Bros, and I'm trying to decide what I need to do. What do you think I should do?
I like the situation. I think Christine Barone, who's been on our show, tells a very good story, better than the other guys. They're not being reckless anymore. I think you can own Dutch Bro. I think you may be able to own it for the ages. And that, ladies and gentlemen, is the conclusion of the Lightning Round.
The lightning round is sponsored by Charles Schwab. Coming up, is it time to ready the landing gear and get out of Boeing after the stock's post-earnings turbulence? Cramer is revealing what it'll take to get the stock back on the right flight path. Next.
Booyah, Jim. Your integrity makes you the booyah saint of Wall Street. Booyah, Jimmy Chill.
Booyah, Jimmy Chill.
Booyah, Jim.
Quadruple. That's a lot of booyahs. Surprise, surprise. Boeing reported a horrendous set of numbers today. It's been estimated they're losing roughly $1 billion a month from this machinist strike, and that's on top of the fact they've gotten seemingly forgotten how to make planes. It's a nightmare. So please be sure to buy as much as you can when Boeing prices its upcoming secondary offering in order to shore up its balance sheet and ensure its survival. Huh? That's right. A horrendous quarter. I'm saying try to buy it on weakness? Yes. Welcome to the world of a duopoly, where everybody wins as long as they simply stay in business. That's right. The worse Boeing's financials might be, the better the buy. Because as soon as this machinist strike is over and Boeing raises some money, it'll be back on the road to profitability. Do not get me wrong. This company is in awful shape. But only 2 companies on Earth can make commercial aircraft at scale, and Boeing is one of them. The demand for planes is off the charts. So they'll be fine once they raise the cash. Most current shareholders speak of Boeing in expletives. But when this deal is done, they'll be speaking of it in superlatives, like the ones that new CEO Kelly Ortberg used to me, tremendous, incredible, to describe the $500 billion worth of orders he has line of sight on, thanks to the world's insatiable demand for travel. What do I think of Boeing, the company? Frankly, it's a colossal disaster with a weak culture, recent history of failure, formerly hands-off management team, and a sense of entitlement and arrogance that can only be rivaled by the newfound Animal House-like reputation. Long gone are the days when my father would cheer when he saw silver B-29s in the sky instead of interminable Japanese Zeros during landing after landing in the South Pacific. There's a generation of people who now think that Boeing, the B-29 maker, is a laughingstock. The fact is, though, Boeing can be fixed. The company does need to get out of what I can only call the extraneous product lines, like its space business, which a previous CEO once told me was superior to Elon Musk's space efforts. Ridiculously wrong. It's got to get back to the basics, building the best aircraft the world has to offer, and it can do that. If Boeing can close out what's losing money and get the machinists back with maximum supervision, they need maximum, then it'll have enough orders to feast on for years. And that's why the stock can spring back. But it is vital, if possible, you wait to buy the stock until they do the secondary offering to give you the ideal buying opportunity. See, if Boeing gets enough money from this equity offering, it won't be downgraded by the rating agencies, and that means it can live to play again. How can they ensure they get enough money? Well, the syndicate managers, the brokerage house minders who run the deal, need to price it in what's known as deep in the hole at a big discount to where it's currently trading. This stock went out at 157 today, up from 146 just 9 days ago. This deal will be vastly oversubscribed at a lower price, meaning money managers will be putting in for much more stock than will be made available because the offering will be done in the hole. That's a sizable discount to where the stock closes the night before. That means these big accounts will get their allocation at bargain basement prices, and then they will most likely buy more in the open market. Otherwise, the positions will be too small to matter, and they'll have a good basis anyway. If you can't get in on the deal, we need to try to find out what the price, where it comes, and then put in limit orders, not market orders, limit orders slightly above the price in the open market to get more stock. More expensive than the actual stock for the deal, but much less than, well, let's say than where it was headed once the balance sheet risk is off the table. Look, Boeing is a gem. I've been to the World War II Museum in New Orleans many a time, and much of it's simply a tribute to their aircraft. Boeing was long the gold standard until it entered a period of purgatory. Can it come back? Of course. But that's because there are only 2 major aircraft companies on Earth, with the other being Airbus. Believe me, if there were a third operator of any sort of proportion, I wouldn't be willing to bet on Boeing. But there isn't. Try to get some stock on this ne'er-do-well company's equity offering. When the deal comes, Boeing will no longer be a ne'er-do-well, because once the strike is settled and the balance sheet's cleaned up, it will be a living, breathing business again, one with strong demand and not enough supply. That is always a great place for business to be. I like to say, as always, bull market summary. I promise I just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow.
All opinions expressed by Jim Cramer on this podcast are solely Cramer's opinions and do not reflect the opinions of CNBC, NBC Universal, or their parent company or affiliates, and may have been previously disseminated by Cramer on television, radio, internet, or another medium. You should not treat any opinion expressed by Jim Cramer as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. Cramer's opinions are based upon information he considers reliable, but neither CNBC nor its affiliates and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. To view the full Mad Money disclaimer, please visit cnbc.com/Mad Money disclaimer.